In this video, we're going to talk about the current cryptocurrency cycle, where we are, where we've come from, where we're going to be, and how me and my team are trading through this period. If you like this sort of stuff, stick with us, buckle in, saddle up, like and subscribe, and let's go. My name's Chris. I run Pollinate Trading. I've been trading for about 25 years now. Been in futures, options, equities, and crypto for about 10 years now in crypto. Crypto is probably the best opportunity that everybody has, whether you are, um, well invested already or just starting out. I think it's, I'm gonna get into it here in a second. I'm gonna get into the charts. I'm gonna break down in there. But one thing I want you to suggest, there's this book called Market Wizards by Jack Schwager, and his first book's the best. By the way, I think that's by far the best book of them all because it gives us that the people who were written about in that book, Paul Tudor Jones, and the people that George Soros, the people that are titans right now, where they started in the 1970s as the young kids just starting out, coming into this new futures market. So futures in the 1970s, that's when they came out, and they just crushed everything. They came in and they went from young, ambitious folks to leaders in the market. And the analog to that period of commodity trading, and the people who came out of it that are still leaders in this day. Peter Brandt was just written about in the last Market Wizard book. The analog to that and crypto is identical. It's just anytime I like need to get myself back in the game, like, okay, you are witnessing the same thing that they witnessed. And then, my son will do the same. And it'll go through time. Crypto may not be the thing in his period of that. But if you go and study that stuff, watch that stuff, read the books, read the stories, and it's just, you just replace it from lumber and gold and coffee or whatever, orange juice or something, and replace it with crypto, Bitcoin, with Ethereum, with Solana, with meme coins, with whatever. It's the same. If you go back to the late 1990s, 2000s, the investors that just crushed the .com expansion, the technology expansion, like Sequoia, John Doerr, the big Silicon Valley behemoths, how they were, all a part of that. The Apples, the Microsofts, which Seattle, but technology. It's a similar thing. Technology in that period of time is the crypto. Crypto is the new technology. So in the 70s, ags and financial markets around being able to hedge your agricultural or commodity risk was like such an innovation. Right now, we think of it as just like just old industry, but at the time, it was innovation. Right now we think about networking and switches and online commerce as like old kind of technology, but at the time it was bleeding edge. Right now, if we're looking at crypto, we look at it and we think to ourselves like, wow, bleeding edge technology, modern stuff, whatever. 20 years from now, we're going to look at it and be like, geez, that's some grandpa stuff over there, that Bitcoin. So the cycles constantly move like that. And I'm going to take some time and crank through this. So let me share my screen and I'm going to show you where we are, everything that is important. Oh, wow. Look, Bitcoin a minute ago was at 90,000 or at 91,000. So we are 1 week and a half past the presidential election in the United States. We can see the reaction. This is a 3-day chart of Bitcoin, by the way. Each candle represents 3 days. So this big 11%, 12% almost candle was the reaction candle to the presidential election. I believe that whoever the candidate was who won would have also caused a rally in markets. Just the indecision being out of the market would have, I believe, been the factor to cause markets to go. Now, we let's take a look at this whole thing in September of 2023. So we're going to go back. Actually, yeah, we'll go back. In September of 2023, it was about getting close to about 6 months prior to the halving of Bitcoin. And historically, a rally begins about 6 months before the halving. And then after the halving, it chills for another 6 months or so. That's happened in the past, most of the time. We only have a couple of instances because we've only had, 4 or 5 halvings? 4? 1, 2, 3, 4. Yeah, 4 halvings, I believe. So we don't have a whole lot of data on it, but it's pretty common. The other thing that's super relevant to understand is it's a 4-year cycle. It happens every 4 years because Bitcoin was created in 2008 at the very bottom, or the middle of the worst of the global financial crisis. Satoshi Nakamoto published his white paper, the white paper, whoever it is, whatever they are. Is it the CIA? Is it, I don't know. It was published, and that happened at the same time that, almost $1 trillion of government bailout money was printed. And, it just kind of was like, also happens right at presidential election cycles. So every 4 years, we have this halving because it's the Genesis moment. The creation of Bitcoin happened at the financial crisis, which was at a presidential election year, it all worked together here. So it also works in 4-year cycles, much like the business cycle does since 2008, because that's the printing. And then you have duration overdue of loans and not of loans, but of like credit, and all the different things that come from the markets. So we have this kind of calendar to roughly know where we're at, but that's in your head. So in September 2023 is when I was like, you know what? We nailed the equity bull market. This thing's going. We're good. I'm positioned. It's set up. I know how to handle it from here. I know that the crypto bull market is going to come back and it's going to be big. And I've been writing this one, I started trading Bitcoin in 2013, 2014. It was around Christmas of 2013. I barely, but it was 2016 to 2018 where I really got my most experience in crypto, and have been there, like really on it ever since, and in the space. I was in technology. I had a startup. I was in an accelerator program, Silicon Valley Accelerator Program, 500 startups. I was doing predictive risk analytics for transportation, my company, Geniusly. And so I was around all the technology and all the stuff as Bitcoin was kind of just blowing up. And so it was just that was my introduction into it. But, I'm in tech for as long as I've been trading. So 25 plus years in tech. And so I've experienced and I understand that when it, just like all markets, by the way. So equity markets, especially. So you got crypto, you've got high tech equity or big tech equity or like technology. And then you've got regular, businesses, stocks. And And then you've got like the commodities and everything. And then you've got credit, and then you've got like cash. That's kind of the stack of risk. Okay. Um, and volatility. I would probably put commodities, it would flip flop between equities, but your return over time is that way. Your best returns are going to come from crypto, then, big cap tech, uh, regular tech, and I'm sorry, not regular tech, regular markets, venture tech, which is also crypto. So it kind of, and then as you get safer down the stack, you are paying your risk is reduced. So your risk premium of being in a volatile asset like this, you get paid for. So in September 2023, we were good. I knew where the business cycle was. We're a year past the bottom. We called the bottom in equities in September, October 2023. It was scary. But we did it, and we put on positions, and we've been doing quite well since then. Equities are doing incredibly well. And then we get into September of 2023, and let's turn it off here. So we're going to be influenced. So the low in the equity markets was right here. It took, another 2 months, 2 or 3 months for the crypto market to actually bottom after all of this. Okay. This was the 2020 to 2022 bull market. Actually, 2021 is about when it ended. Just like equities, they all rallied and failed together. We could, go back to, this would have been the 2018. So here's another interesting thing. U.S. market, the U.S. financial markets crashed in Q4 of 2018. Yeah. Bottomed on Christmas Day. You can see that it also happened in crypto. So these all work together. So all of the risk markets are aligned. So you're going to have the stock market and the crypto markets bullish generally. You may have a down day, like today's a down day on NASDAQ. It's down 2.5% right now. Boom. Just straight up, since the election, it went from 20,128 to 21,300 or so. And now it's back down to 20,500. Okay. Whereas Bitcoin, same period, just straight up. Okay. So they're not correlated on a day-to-day basis, but on the big picture, they're correlated. Because it's a business cycle thing. It's the economic cycle, I should say. As you have expansion, the business cycle is like, I think it's growth, expansion, peak, decline, whatever it is, recession, not recession, that's at the bottom. I forget the business cycle, but there's these cycles where you have growth and the cost of capital is low. So declining rates and rising growth measured by GDP. You'll also get some heat in inflation. And so good inflation in this sense, because we own assets. Inflation is not that, like, I'm not the big proponent of 2%, growth year over year. I think that's a robbery of our capital, but it's also how we finance the future and do all these credible things. So it's about a 4-year cycle because of the 2008 financial crisis, when we totally separated from the financial system of, like, there was some honor that the United States had in that our credit, we were going to live on our credit, stand by our credit. Because in 1971, we went off the gold standard. 1945, 46, whatever it was Bretton Woods, what kind of like made the US dollar the thing. And since we have control of the currency in the United States, I'm an American, obviously, we have the ability to do what we want with the money. And so, it's a game, a confidence game of, do we ruin everybody all at once and just make ourselves win? Or do we bring everybody along and, hopefully we win the most, but everybody wins? That's the game. Um, and if you don't play along, our Navy and military will come into your country and destroy it. We may not win. You may kick our butts in war, but for, however long we're in your country, your entire civilization is going to be destroyed. And oh, by the way, our, you know, our economy is going to get stronger because war is, a large portion of our economy. I think it's the biggest budget item in the U.S. government is DoD. So it's almost in our well, it's not just almost, it's in our favor for somebody to be like, we're not going to do the U.S. dollar. We're like, great, we're going to make trillions of dollars off of this. So you think about that, then the whole brick, which is a completely different discussion, is actually a bullish thing for the U.S. Ironically. Great. So back to it. So if the cycle goes every 4 years, 2008, 2012, 2012, 2016, 2016, 2020, 2020, 2024, we're in 2024 right now, and the bull market began 6 months before the halving. The halving would have been in April, right over here. We got our long signal right over here, our entry signal. Now, the signal, this is the pollinate crypto momentum system. This is the number one. Nothing else matters until this thing says go. And it isn't go buy Bitcoin here and then sell here. You could do that. That's fine. There are, but the big daddy of them all just says game on and then game off. It's going to be Bitcoin. It runs off Bitcoin. So Bitcoin is the show. If Bitcoin's not in the move, if it's not moving, it's not creating the move, then a crypto rally is not a crypto rally. It's just an asset rally, an individual asset. And we get examples of that, like there were airdrops. There were a bunch of reasons where certain tokens or certain coins or certain cryptos would do something during the bear market, and everybody's like, oh, we're back, but you're not, because the big guy is not there. And at the beginning of a crypto rally, Bitcoin's first to go. And once it goes, everybody else is free to get on board. Okay. And it's also the first to leave. So Bitcoin will signal the beginning earlier than everything else. So Bitcoin and then altcoins come join in. Then you have an altcoin, and then it all crypto together goes massive. And then at the end, Bitcoin usually stops first. And then the altcoin market has one big final blow off. And then the bear market kicks off with vengeance. And at the beginning, the reason this happens so well is because at the beginning of a bull market, it's highly resilient. The assets are highly resilient. Whether we're talking about the S&P 500, whether we're talking about Apple, whether we're talking about gold or Bitcoin or crypto in general, everything at a bear market bottom or the beginning of a bull market is so early, and it's just everybody's sold who wanted to sell. New money's come in, new perspective on things have happened, and people start, and investors and whatever, every entity that's involved, your stop is minor. Like if you bought at 30,000, you put your stop at 20, let's say 26,000, that's 4,000. That's nothing. Because if you bought it, 73,000, your stop had to be what, 66? So 5,000, twice as much, maybe even all the way down, like your 1 day move, this 13% move, for example, went 4,000 points. Okay. This 12% move, so about the same, 9 points. How much was this? 6 points, 9 points, 9,000. So it's just because it's different, right? At 30,000, it's different than at 90,000. So when you're doing it over here, you have to put on bigger size to have bigger moves, bigger returns, right? You're getting 1% moves right in through here. As we're moving into this, these, 10, 5, 12, sorry, 12, 5, 12% moves during these periods of time is massive moves. So your volatility is really low down here. Your volatility starts to get higher here. The longer we go into a bull market, the more fragile everything is, because people are at the bottom. You're not worried so much about losing your money. If you're putting money in at the very bottom of a bear market, you're like, well, great, I'm getting in, this sucks, but I said I would buy, or we're at the end of the cycle, whatever it is. Now here, when our signal kicked off here. Yeah, right here. So it was the breakout somewhere in here, 30,000 or so. It was like 29,000, 30,000 was the signal. Yes, we did not buy at 15, 16,000. We didn't buy at 20,000. We didn't buy at 25, any of these. I did, but a little bit, but that wasn't the system, because it wasn't until September that this system was actually built. Like, I built the system right in here. In September of 2023, I was like, okay, we are about to kick off in crypto and I need to get my system built. I had been wanting to get it done for a while, but it did, I kind of did some of it over here in this bull market, but I didn't. And then it went into a bear market and I was like, fine, let's go work on other stuff. But I know that I have until 2023, the last 6 months before the halving, before I really need to worry about the signal. And then we get into September and I was like, hey, we're good on equities. Let's get into it. Okay. So when the signal fires, you can absolutely just go buy Bitcoin. It's safe, because you're going to have a 2-year run at least from that point. So if nothing else, the entry signal is super, super useful with this strategy. You could just use this alone and be in where you want to be, and you're good. That's all you have to do. But that isn't how I 17x my money since that period of time. I 17x'd my account starting in October, when the signal fired. I 17x'd my account up till this period in here. And we're just getting going again. You may think to yourself like, wow, you didn't, I haven't looked at what the actual amount is since that, but I'm going to explain what happened in the period before we're here and where we currently are today. So this got in, we had the ETF. Now, here's the thing. My systems they talk to me. By having a system in place, I can look at it and I can make other decisions. So like 95 to 99% of my trading is all systematic. It's the system I'm going to talk about here, the crypto system that we use here at Pollinate. And I'm going to show you where it gives me the ability to make another decision, like a small decision, very, very infrequently. And, what is that like? So the entry signal here kicks off. When the ETF was announced, everybody was saying, oh, buy the rumor, sell the news. That's the end of it. It's done. We got to wait for the for the bull market to come back. It's just going to, do another. That's just a trick-a-rooney. And I was like, I don't think so. I think this is actually the onboarding thing. But, well, actually, that isn't what I said. I was like, actually, my signal has me in. So I think you're wrong. I don't know if I said that to anybody, but I put my money where my mouth was and I went in and I added. Now, with this system, it allows me the ability to not have to think about where we are every single day. And if something bad happens, if it's the end of it or not, I'm not worried because it hasn't kicked the exit signal yet. If it kicks the exit signal off, then I start to, yeah, then I look for the blow off top in alts. And then I realize, hey, let's get as much as we can, and then let's go protect ourselves. Now we've got another year of this. I'll show you where I get that in a few minutes. Hold on for that one. But as the ETF came through, and if you're looking at it without the, if you're just looking left, you can see here's ample reason that people would be like, oh yeah, that was a 50 to 61.8% retracement of the fib from the high to the low of the bear market. So there's a lot of people that were, I'm not saying the fibs are the thing. I'm saying that there's people who are seeing that and they're like looking left, right? And they're saying to themselves, well, that's a 50% retracement. What a big move. We haven't even got into the 2024 period yet. We just started. That's, it's not going to happen for another year or two. And so everybody was taking profits. And to be fair, the run up into ETF, everybody traded. And then when it was done, everybody sold. So interesting. We're in over here. I buy the ETF for my son, the model portfolio. My nanny, you should get some. She's like, oh, I just had a big inheritance, so sure. Or I just had an inheritance, so I'll do that. And we got her in there, 45,000 or so. And so as we're trading this, for the next month almost, was it? So from the first week in January until two weeks or so, 2-3 weeks of time goes by, and we get down into here, and everybody's expecting 32 or even back into like this channel, down into this range, maybe even a 50% retracement. Everybody's talking about. So there were a lot of numbers. People were looking at 32 to 28, I think was the big thing that everybody's talking about. So I'm watching it, and I put a video out. There is a full video of me saying this, explaining exactly how I'm looking at it, why I made my changes. It was like real time. It's on the site, or it's on the YouTubes. So we come down here, and it's just been going down straight. And then one day it gaps up. And that was the first time it gapped up, I think, and actually held the gap that whole day. And I was like, that's changed. That's different. Something has changed now. So when that happens, I say, okay, let's buy. So we get in, and the next day it holds up. I think there's another gap, or maybe it's sideways. It just doesn't go down again. I'm like, this is what we're looking for. We already know we're in the buy. We already know we're in the bull market. So I don't need to think about selling. I just need to see, like, where is it going to be? Where should I buy? Where can I buy at a place that will never see this price again? First one, I already knew. This one, I already knew. That was a given, because once the signal kicks off, you never see that price again. Okay. This one, we may see this price. I don't think so. But my guess is we might see 70, whatever this high was. So we might see 70,000 again from a high in the bear market, but I don't know. Doesn't really matter. So we buy more here, and we take off into this amazing bull run from January to March. Now, the system, understand, I'm not just trading Bitcoin. The system, Bitcoin signals it all. Okay, it says it's time to play the game. Then I go to the sectors, the different sectors, and the different crypto projects, tokens, coins, whatever terms we're using. And we get into our system, our strategy, our algorithm puts us in the best asset every day. I look at it every day, twice a day, actually, morning and night. And if it says buy this, I buy that. If it says buy this, I buy it. If it says sell this, I sell that. And I'm just rotating into the hottest moves every day. So from 30,000 to a peak of 74,000, so 150% move or so, I 17x'd my money during that period of time. So if I just bought Bitcoin at 30,000 and held it to 74,000, let's say about 10,000, now I have a $25,000 account. So it doubled and a half. right? So that's a 2.5x. I 17x'd my money in that period because as we get, you can see big move kicks off and then it's just kind of grind, 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 grind. So when this is happening, guess what I'm in? I'm in memes. I'm in Injective. I'm in IMX. I'm in ICP. I'm in SUI. I'm in Say. I'm in Metis. I'm in, I don't know what Solana. I'm in like all the, maybe it was in December when I was in, I don't know. And then we get another big move in Bitcoin. So kind of, all right, everything kind of calms down and Bitcoin does this big break. And then we get another month of just sideways action in Bitcoin. And so crushing the alt game, right? I think I'm up 6x by the time we get here. And then, nothing happens. So I'm kind of like frustrated through here. And then it kicks off again. Boom. And we're in AI. And then it rotates into memes. And I go from 6x to 17x through here. And then it's done. Nothing happens. So we might have had a couple of signals in there that didn't play out, maybe like in here in May or whatever. And I was just like, okay. So I caught 17x and I did nothing for 6 months. When August happened, my systems, all of my other systems were almost completely flat, zero. So I was aware that a crash was imminent of some sort. But I also knew that we are still in the buy. Turn this back on. Come on, button. Oh, wait. Okay. So we're still in a buy here. And all of a sudden we get this major sell-off down into it. And I'm like, great. I'll buy more. I put a buy order in at 53,000 because I used, volume profile to see where the most likely place that price was going to find support at was, and put it on. And at 53,000, so that was right here. So now I bought it 38,000, I think. 30,000, 38,000, 53,000. It comes down, test it again. I'm not worried. The long term has me in. Now, the thing is my perspective on all this is to stack sats, right? It's to own Bitcoin. So any chance that I can get to buy Bitcoin with 17x returns, 1,700%, is that what it is? I don't know what it is. 1,700, 1,600% returns, whatever it was, turn that into more Bitcoin, I'm going to. And so I buy more, knowing that whenever this happens, whenever I'm in that position to make that trade, I know that it's likely the last time we'll ever see that price. And so I took that one again here in August. And so far, I've loaded up. That moves us here. So the big chunk of our family's crypto holding is in Bitcoin. It's all made not in Bitcoin. Bitcoin's fine. It's all made from trading the other stuff when a Bitcoin bull market is on. So if I make another, and it'll probably be 100x by the end of the cycle. So if I have 100x move, that's going to end up in Bitcoin and other assets at the end of the cycle, which we're going to have a down cycle. So it's going to come back down, which means I'm going to have to wait for these other good opportunities to buy more. And I'm going to keep getting money, earn money every month, just like everybody else does. You get money coming in, and as that money comes in, you got to put it somewhere. So I'll continue to allocate. So as that happens, that takes us to the presidential election. And so a lot of people were asking me as we were heading into the election, should we lighten our exposure? Should we de-risk with all the volatility and all this other stuff? And I was like, no, absolutely not. The strategies don't tell us to do that. Our equity systems were at about 40% exposure, so 60% cash. And then the day after, they went almost, doubled that into positioning. So the algorithms did what they were supposed to do. It nobody had a clue what the outcome was going. I didn't, at least. I didn't trade, but my systems had me positioned so that there was no clear decision that needed to be made. The algorithms were low exposure. If I have low exposure through the algorithms, all that means is, okay, we're likely at a transition point, a turning point, because these systems are momentum systems. So if there's no momentum, they're going to be low position. They're going to be not very positioned. If there's high momentum, they're going to be all in. So our systems that 17x'd through here were at like very low exposure. And then they instantly go from very low exposure to 100% exposure into the markets. And let me show you. This is what gives me a lot of confidence. Let me rerun this. This is an analog chart of Bitcoin for the last 3 bull cycles and the halvings. So the yellow one is 2016 to 2018. The blue one is 2020 to 2022. And the white one is the current one. You can see that the white one is identical to the 2016 to 2018 market currently at the moment. 2020 market, the reason I think that one's different is because it was artificially influenced through something that happened in the beginning of 2020, which I can't say on the internet, or I get knocked down in views. And everybody was at home and nobody was spending money on traveling to and from the office, and paying for gas and paying for parking and paying for lunch at work, and buying clothes for work, and everybody was at home. So you had a little bit extra money. So nice. Let's start investing a little bit more. Great. Let's do it. And then, the government's like, here's a bunch of free money too. And so the peak that should have happened over here, 2 years after the breakout, or the buy signal, 2 years after the breakout, it kind of happened. The majority of the move happened the first year. And then again, the government came in, and so you get DeFi and you get NFTs and you get all this innovation and everybody's doing stuff and it's great. And then the government comes in and you have things like Luna, and you have things like FTX, and you have like all this fraud and everything like that, and the government is here to save you. And they basically destroy crypto for the United States for 4 years. And so this one looks horrible to me. That's the one I don't want. This is the analog I don't want to live. Luckily, we are in the first one, 2016, 2018, which was the retail onboarding into crypto. That's what I would theme 2016, 2018. That's when the online crypto exchanges became mainstream. So the UX of like Coinbase was super easy to use. You could come on and just, sorry, I had a thought for a second. You could come in and just like, oh, here's my thing. Here's my credit card. Boom. There's $5,000 in Coinbase. I'm buying Ethereum. I'm buying Bitcoin. And you get airdropped Bitcoin Cash, which was awesome too. And so, it was very pure market for a while. And then, the ICOs came in. So after the first 6 months after the halving, basically, it kind of does a little bit of nothing. That the yellow line, just kind of it goes up, it does, but it's not doing anything all that exciting. And then it goes. After about 6 months post-halving is when it really started to get going. And you go, it increases by about 400% in price during that period. And so we're pretty much right there. We're starting to get a little hot earlier. And again, retail onboarding of crypto with the ETFs in the United States specifically is like the thing that happens. The other thing that's happening here is deregulation of the crypto markets, where 2020 to 2022 was about regulating the crypto market, the regulators, the SEC and DOJ and the unbanking technology companies that had anything to do with fintech and just kind of like destroying innovation in the United States for the last 4 years. That all happened in that period. And so that's why it's an ugly one. I think we're going to have deregulation. So Gensler will be, we're pro crypto regime. And a lot of the things that we're not like, think about it. The biggest market in the world is the United States. If you can't innovate in the United States, then you go elsewhere, right? Or you choose not to do the thing that the United States is not letting you do. So in some cases, Singapore was a big place for crypto. Malta, Dubai mostly. I think Dubai and Singapore really became like the big hubs because it's also a center of commerce in other ways in finance. Nothing against Malta, nothing against Portugal, nothing against these smaller countries. It's just that so much money is in Dubai, so much money is in Shanghai, and they are pro crypto and they are pro technology. And so it's those two are like the easiest, I think, that most people went to. You notice the day after the election or the day of the election, suddenly, day after the election, Coinbase. Let me see if I can find it. One of these here. It's not it. Okay. Since the election, so this would have been. Oh, not that one. Where is it? Do I not have it over here? I thought I went and grabbed it. Grab two of these. Well, yeah, let me grab it real quick because it's actually relevant. Here it is. Sorry for that. Okay, since the election, that would have been Wednesday, November 6th. Let's get back to Tuesday. Here we go. Since the election, Coinbase is the number one returning asset that I have on my watch list. Twice as much return as Bitcoin. And that's because Coinbase is a crypto exchange, right? In the United States, they were being punished. They were being tortured. They were being, there was so much regulatory risk with them that it was a tough investment. The second, the idea, like nobody new's in office yet. It's just, most likely SEC is going to not be Gensler, and all the different things that this means. It just opens up Coinbase for returns. So the best returning asset in a week and a half at 57% was Coinbase. And I think the biggest move was last Friday. It looks like Bitcoin's next, alts below that, Tesla below that, GameStop. So it's just, at this point with GameStop, I think it's just, everybody's like the bull market's back and Robinhood's fired up and whatever. Surprised to see tech not do as well. But excuse me while I drink sparkling water. It's kind of surprising to see that, but whatever. I think the real bull market in tech and everything like that will start to play out. It's just, look, they make so much money, and you're betting on things that are just going to constantly print money, and that's Amazon, that's Apple, that's Nvidia, that's Google, Microsoft. Those companies are going to print. Tesla, of course, because Elon was so much involved in the election. But that tells me that we are in a new regime, and we're about to do the things that this thing we should expect. Now, it's my opinion we get up to about 250, 300 Bitcoin, 1,000 Bitcoin. That's my opinion. I could be wrong. I'm not trying to call a shot, because again, all I'm going to do is wait for the sell signal, and the sell signal is going to be after the top. It's just going to be the confirmation that we're done with it. So I'm going to hang out in the bull market longer, because I would rather get all of the bull market than get out too early. If I'm always focused on getting out early before the top is where the absolute most amount of money is made, because this is what makes it so fragile. That's what makes it a top. You don't get a top in resilient markets. You get tops in fragile markets. And you don't get fragile markets unless you get why do people ring doorbells? Recording. It's always the same. It was worse during the elections. And they would just sit there. So you don't get a top when it's resilient. You get a top when it's fragile. And you don't get fragile markets at lows. You get fragile markets at all-time highs that are just like wacky, where you are hearing stories of people becoming millionaires off of little stupid things. You hear it all the time, but it's the wrong person. You'll know the wrong things are being done, the wrong people. It's actually the right people, because they're the either left brain, left curve or right curve folks making all the money. But it's, you're going to hear the dumbest things making. Right now we have memes, and it seems like that would be the case, but memes are just, they're just a product that they're here. They're not going to leave. Memes have always been a part of crypto. I'm not downplaying memes at all. I trade memes all the time. In fact, that's what I'm in. I'm in AI and memes right now. That's the market that I'm in. And I'll show you why. Because our system puts us in the strongest categories and keeps us out of the weakest. So right now, the majority of my holdings in our system is in memes, layer ones, Bitcoin, Solana, SUI, and AI, DePIN AI, decentralized physical infrastructure, and AI. And that's it. So I'm not in DEXs, I'm not in IoT, I'm not in real world assets, I'm not in DeFi, I'm not in gaming, I'm not in layer twos. I am in the strongest. And that's how you go from, Bitcoin making 150% gain. Instead, you go to making a 1,700% gain during the same period of time. Is you get into the strongest ones. And so our strategies, we'll pick the strongest memes, we'll jump in those. We'll pick the strongest layer ones, we'll be in that. We'll pick the strongest AI, we'll be in that. And then the stronger AIs come up, we get into that. It's simple, but our system is rotating us into the strongest and getting us out of the weakest, so that we're constantly at the top of the game. So we know that we're going to have a transition. And as that transition comes, we know that. So right now we had a peak in memes over here, because Coinbase, because they're suddenly, got no issues with listings. Coinbase, with regulators, Coinbase like, cool, we're in, we're going to list Pepe, we're going to list WIF. They just insta listed a bunch of memes to the platform, bam, 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 a bunch of names too. But the strongest are going to be the memes. One of the reasons the memes are so good, this is going to be a long video, I'm sorry. One of the reasons that the memes are so good is because it's no longer a lie. It's just flat out telling you, we're just a thing that you can put money in and make money on. 2017, those were ICOs. And ICOs were these, hey, we're going to solve this problem, because everybody saw what Ethereum did, and Ethereum made it easy for people to make ICOs. It's like, oh, there's a problem, we're going to go solve it. Or here's a solution to something that we think's a problem that's not. We're a solution in search of a problem, and we're going to do a white paper, and people are, and some of the teams were like, yeah, we're really going to go after and do this stuff. We're going to do great. Um, and we're probably going to need about $3 million to make this happen. And they launched their ICO and they walk, you know, you have suddenly $1 billion in your pocket. And you're like, well, maybe I'm not actually going to work on that project anymore. Maybe I'm just going to have my $1 billion and maybe I'm just going to run for president. Sorry, buddy. You know who you are. um, and then, maybe you're going to be like, actually, I feel bad about that. And I'm going to come back and make a good run of it and actually do the thing that we said that we were going to do. And oh, guess what? That technology actually didn't really work. And so they ended up being memes. They weren't really like a meme coin. They didn't like meme anything. It wasn't a mimetic of anything, but it was just a idea and a token and a white paper, and they got rich. Here's my plan. I get rich, you get poor. That was those. So the first few kind of started out that way, and then towards the end, it was just like, we just need to make as much money as we can. The opportunity's here, let's go. And they did, and they executed, and they made a bunch of money, and then they exit dumped on everybody. And then the same thing happened in 2021 and 2022. We're all aware of the Luna, and we're all aware of Three Arrows, and we're all aware of FTX, and we're all aware of the DeFi scams and the NFTs and all that sort of stuff. And so in this cycle, the memes are just they're just skipping ahead of the line, and they're saying like, we're just a freaking meme. We're nothing else. Do you really care what you're investing in? No, you just want to make money, right? So here, this is a funny meme, and people in crypto are into, all sorts of humor or ideas or things like that. And, we're going to do this, and they do. And suddenly it's like, okay, we have a whole section of cats and dogs and squirrels now. The 8th largest meme in the world is squirrel as of yesterday. I don't know if it still is today. Probably higher. Or it got delisted. I don't know. You have memes for like Iggy Azalea had a meme named, Andrew, what's this guy's name? Whatever. There's all these memes of just nothing. I've got SPX 6900 and Sigma and Peanut, and I got a small wallet of non-systematic. I just picked them up and whatever, every chance I have a couple of bucks and I see something, I kind of throw it in there for fun. I did pretty good on some of them. Got scammed on plenty of them. So, but the real money, look, if I only made 17x in this crypto cycle, like, honestly, it's not horrible to have done that, but I would feel like I missed out big time. I crushed the first half of the year, right? We crushed the first half of this year doing that. This, however, we have a full on 300 plus days. We've got another year to go at least. And this is just the top of Bitcoin, by the way. After Bitcoin peaks, there's still another month or two of speculation before it all comes down. Okay. So also the second half of the 4-year cycle begins in 2026. 2025's the best part of the cycle, and just runs. And then 2026 is when you get the top and the bear market. 2027 is when you get your recovery, and you're 6 months before the halving. And then 2028 is the next 4 years. So understand that. The last thing I wanted to do, I wanted to cover we have the crypto momentum system. That's already available. You can get access to it. You can join us. You can trade. I'm fully expecting to 100x the account from where it currently is. So a 17x plus 100x on top of that is what I'm expecting to get by the end of the crypto cycle. I've done it before, done it twice in 2 cycles. We'll do it again. And one of the ways that, as I kept saying, like, we just put all our money in Bitcoin when we're done and everything like that, I actually decided that I would rather have a system that got the same amount of returns as Bitcoin without the volatility. And so I went out and I built a fully automated, fully algorithmic trading system in Quant Connect that trades that trades crypto. So this is, I don't know what this is. This is weird stuff here. So this is the system. I don't know if you can see it, but since 2017, January 2017, it has a 20,000% return with only a 26% drawdown. So that is a Sharpe of almost 2, compounding annual return of like 100%, compounded. That means you double your money every 6 months, I think, something like that. Has a Sortino of 2.3. Alpha is 68% above just getting regular market returns. So 68% or 12% above just sitting in the market. Let's see, the trainer's 5.79. Dude, this system's epic. The win rate is only 41%. This is kind of the secret that a lot of people don't like to deal with, is a lower win rate strategy makes a lot more money because it's hard to get to deal with low win rates. So let me start it out at, let's start it at, let's do 10,000. Let's say you started your account with 10,000 and let's start it at 2020. Let's say you started this 2020, the very beginning of the 2020 year. Okay. So you're going to catch a bit of the stuff that happened in that year, the drawdown. And you're going to catch the bull market. You're going to catch the next bear market. And you're going to catch our current bull market. So this is going to be a $10,000 account, is $70,000 in, so a 676% return with a 16% drawdown. So the Sharpe dropped down a bit. CAGR is down toward 56%. This is what you'd expect. So from 2017 to today, you have 100% CAGR. From 2020 to today, you have a 50% CAGR, okay? Compounded annual growth rate. Win rate stays the same, about 60-40 on the favoring the losses. So your winners have to be bigger than your losers, and they are. This is an awesome system. Let me take it to, that was 10,000, right? Yeah, 10,000. So let's say the beginning of, let's just see what it would have done to the peak of, yeah, I think that would have been, I don't know how much, it might need an extra day or two to catch up. But so for the past, that period where I 17x'd my account, it's 100x, I'm sorry, 50, it made 50%. So it took 10,000 to 15,000 in that period of time with a drawdown of 7%, only 7%, given it 110. Your Sharpe went way up. Okay. So if all you did was trade this strategy from the breakout signal, the buy signal here, to this period, you would have made 50% with a 6% drawdown. So you can, that's without leverage. Why is that useful? Because when I take all my money out of the system that I trade, my momentum system, and I go into, let's just trade, let's do from 2021 there to 2023, and let's do 9. So let's do the bear market. Whoops, 2021 and added character. So let's do the peak of the bull market to all the way to through the bear market and back up. Let's see how it performed during the bear market, basically. You'll see why I'm so excited about putting all my profits in this. So it makes 22%. So all my crypto goes into this account, and through the entire bear market, instead of taking a 64% drawdown, it has a 13% drawdown. Sharp goes to crap. Everything goes to crap. Um, your win rate stays the same. Everything stays the same, but you're up 20% in crypto during the worst markets. So you take all your money from your winnings, you put it into crypto. What is the CAGR on that? 12% CAGR, which is still better than the S&P 500. And you just let it trade. And so that you can be around for the big one, right? So you can put in, is that 100 million? It's 100,000. You put in $100,000 in 2017 and you walk away with 20 million 7 years later. $100,000 to 20 million trading this system. And you're still, so if you think about it, let's say I put this 50,000, I think is what I put, no, at 10,000. Say I put 10,000 in to start today. And then I go trade my regular system, bam, 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 make 100% on that. Let's say I put in 10% there. I'm sorry, 100x. So it's $1 million, 10,000 to $1 million. I think that's yeah, let's do that real quick. Yeah, $1 million. Okay, so I take $1 million and put it back in my system here at the end of that using these round numbers. And then I make, during a bear market, another 20%, 20, 22%, whatever it is, through the bear market. And then, this is the bear market one, 22%. And then we come back into the bull market again and we do another 100%. So, so now I start with, instead of starting with 10,000, I'm starting with 1.2 million the next cycle. I 100x that. So we're at 120 million, right? So it's a safe place to put my money. And then it's a great place to put my big money, right? So if I do another crypto cycle, and this cycle, let's say I take the equivalent of a 10,000 to $1 million. I take that $1 million, I put it in the regular, this system here, let it trade during the bear market, make some money. And as we head into the bull market, I take whatever profits I did out of this and I go and run it back into the momentum system while this one continues to compound. So another, 100% per year on this one. So if I get $1 million in here, 100% to 200% during the bull market, I'm at 3 million on my big money. And on my momentum system, I take 100 and 100,000, 100 or 200,000, 100 exit. So that's another couple million. Is it 20 million? Something like that, 10 to 20 million. Drop that back in here, let this thing compound, and I just keep going. So this is the newest thing that we are adding to the for members of the crypto momentum system. We're beta testing it right now. We're getting it up, alpha testing with me right now. I'm going to see if we can, get all the bugs out. And then this is only going to be allowed for crypto momentum system members. The way we're going to do it is it's going to be, you only need Coinbase to do it. No margin, no leverage, nothing fancy. It's just straight up trading spot in a basic Coinbase account. So we're going to start with Coinbase. You'll add in your API. We will not have access to withdraw or do anything with your money. We will just have trading access. So we'll only be able to buy and sell. We won't be able to move funds out of it. So it'll be you just connect your thing to our algorithm, our trading algorithm. And then we're going to add the other exchanges. And then we're going to, as this works out, we're going to add new algorithms. So our main strategy will go from manual execution to fully automatic. So all of it will be fully automatic. You'll just map your account. We're not there yet. This is where we're going. I'm stoked to get this out there and ready to go for you guys. But at the moment, I'm focusing on getting it up and running with with me. with my own capital and make sure it works. Yeah. So I think this is a $5,000 beginning balance in 2017. 7 years later, that's $1 million. So, 100% growth on a $5,000 account. Look at that. You put $5,000 in at the beginning and you just run it for less than a decade and you get yourself to $1 million. And then $1 million compounds at 100%. And then that compounds at 100%. And that compound, and it just, you get yourself to 10 years in this strategy, in these strategies, and you find yourself going from a small amount to a very large amount. The secret is staying in the system, because it'll be easy to think, oh, I'll just take some profits off the table, which you can whenever you want. It's your money, it's your account. You can constantly put more money in it. So if you need cash, whatever, use it. If you put it back in, you're going to miss out on the growth, right? But yeah, just look how it goes, man. No, never a down year, just straight up, even through bear markets. These are some weird prints. I don't know what this is. I'll have to look at that back test. But okay, long one today. Thanks for sticking with me, guys. Love you all. Hit me up if you got any questions, and I will catch you next time. Bye-bye.